What's up, fellow investors? It's Matt. Man, I have had a busy couple weeks, but I'm glad now it's Sunday night. I can sit down in my office and make this video. In this video, we're going to be going over a little bit of review of what's been going on in the market. And also, I'm going to go over my positions and recent transactions that I've done in my portfolio. I'm really excited, so let's get started. Alright, so on my screen I pulled up my trading view and I'm looking at the SPY, the SPY ETF, which is a benchmark for the S&P 500, which is basically the general market. And it's been a pretty interesting couple weeks for the market because we've seen this big shift from growth to value, as value has really been outperforming a lot of different sectors. Value includes like industrials, healthcare, staples, a lot of the more defensive sectors in the economy. And you've had large cap tech, a lot of the FANG names, especially Apple, come out with really great earnings, but we've seen them sell off after hours. So if we take a look at Apple here, I mean, they just came out with killer earnings, and then people were really confused to see it fall after hours. And then even worse, we've had small cap, tech stocks really get a beating. You have a lot of crowd favorites are, Palantir. Palantir, this has been a drop from about 40 to 19. So that's a 50% correction right there. And then let's look at some other ones like Neo. Neo is also a drop from 64 to 36. That's also pretty close to a 50% correction right there. 44%. And you have a whole bunch of small cap tech stocks that have really, basically been cut in half over the past, couple months. So sentiment in the market has really been all over the place because a lot of newer, younger investors, they're really heavily weighted towards growth. So their portfolios are really being hurt right now. So they're really feeling the pain. People are worried that inflation is going to be higher in the future. And then, then you also have the value investors who are coming out and they're saying, basically that their time is now and that expect value to now outperform over the next couple of years and be prepared for these continued weakness in a lot of the growth stocks, especially the large cap tech. And then in the midst of all this, you also have, Ethereum and Bitcoin, still doing pretty good. Wow, Ethereum's at $4,000 right now. So it just seems like narratives are all over the place right now. And what does that mean for us and where do I stand? But in general, where I stand, I know valuations are high right now, but just from looking at history, high valuations alone do not mean that a bull market is over. It can mean that you might get corrections or a bumpy price action along the way, but that's just very normal in a bull market. And I also don't think that growth stocks are going to underperform value. Typically in late stage bull markets, you have, especially the large cap growth stocks, typically those perform very well in late stage bull markets. So I do think that a lot of the FANGs and the large cap techs are going to retake their crown sometime in the future and continue to be, leaders in this market. I don't know when that is going to occur, but that's just the current mindset that I have right now. And, also I keep reminding myself, there's a saying by John Templeton that he basically says, bull markets, they don't die on optimism, they die on euphoria. And I think that's what's showing right now. The markets are definitely optimistic because valuations are stretched. But if we were in a state of euphoria, first of all, I think we would have it show basically across all markets. And, I think because Apple can come out with killer earnings like this and trade down, to me that shows signs that we're in a healthy market right now. And investors are basically trying to do their best to estimate what earnings for these stocks are going to be like a year from now, which is very good for us. These quarters seem to be priced in, but, if you're in a state of euphoria, you're going to have these great earnings come out, and people are just going to come up with reasons that the stock should keep growing faster and faster and faster, and prices are going to rise to even higher. There's no bear case when you're in a state of euphoria. So where I'm finding values right now are the stocks that I really like. I thought they were reasonably priced before this correction, and now they look even cheaper. So that's going to be, to me, on looking at Splunk. This is a company that I did a video on. I think it was the first video I did, but also Uber, another one, a company that came out with great earnings. And the good thing about Uber's last quarter is it looks like their delivery service, like their Uber Eats, is a lot stickier than a lot of people would thought. So I think Uber has a really good chance of being very profitable and really turning around over the next couple of years, as its rides, just the regular Uber, is really its cash cow, and the economy returns to normal. This could be a good turnaround play, and I love the fact that it's trading down after earnings, because with Uber, you are dealing with a lot of the legislative news that comes out, because there was an unfavorable ruling in Europe where basically they're considered employees, and because they're considered employees, it just adds a lot of costs in terms of being compliant, what they have to do because they're considered employees, like provide full healthcare benefits. But ultimately, I just don't think that's going to happen across the United States for Uber. I really do think there's going to be a compromise, and something similar to California's Prop 22 is probably going to be what's going to happen to a lot of the gig economy legislation. And recently I've been doing a lot of videos on like Home Depot and NOC and Allstate, a lot of value companies, because that's really what was appealing to me kind of at the beginning of this year, end of last year. But now that they've, most of these stocks have made a big move, so I'm trying to look in other places. Home Depot, I mean, man, I was hoping I could get more down here, but it's already made a move up to $340. That's a 35% move for Home Depot. And, I still think its future is bright, but I do not like chasing stocks when they get extended like this. That's just not my style. So like a company that I am looking at right now is like Adobe. Adobe is a company that still has fantastic growth. It's expanding in the CRM industry, which is, it's going to compete with Microsoft and Salesforce, but it's a company that has great growth. I pulled up them on Finbox here, and we're looking at basically the quarterly results of, Adobe's income statement going back. But its last quarter, it did 26.3% growth. And now its margins too are, its operating income was about $1.4 billion. Let's see, divided that by 3.9. That's about between 35 and 40% margin. It's Sunday night. Don't judge me if that's way off, but it's somewhere, I think, between 35 and 40%. But a company like that, it's a growth company, and that's why it's been weak. But to me, it looks appealing now, especially when compared to the rest of the market. It's still in this big timeline of consolidation. It continues to improve its top line and its margin. So this might be a company I add more to. Also, Salesforce is really in the same boat too. It popped big when, it had, this really good earnings report, and it was also introduced into the Dow, I think, sometime before this report. So it had a big run up, and it's been consolidating for like a year now, and it's still a great company, similar to Adobe, where it's really growing its top line. It's really improving its margins, and it's in an industry, the CRM industry is a really good industry to be in over the next, 5 to 10 years, because it's going to be growing pretty rapidly. All right, yeah, so this is a spreadsheet. I just always want to be transparent with everything I own. But this is a spreadsheet of my positions. My portfolio value is about $280,000 right now. I'm not sitting on a ton of cash, just about $4,000 in those accounts. And I've ordered these generally from my, larger positions to my smaller positions. And I guess I should walk through the table just so it's clear. So here in this first column, I have basically, the stock and the ticker. This is going to be the amount of shares for all the stocks, and it's going to be the number of contracts for the calls that I own on the NASDAQ and Microsoft. This column is going to be the price that this stock is trading at, the respective current value of these shares at this price, the percentage of my portfolio, what I bought what my cost basis price per share is. So like for Zillow and Square, those are companies that I bought. I was loading up my position a long time ago, so that's kind of why that they've grown to such large percentages of my portfolio. And then in the next column, I basically have my, the gains I'm sitting on for these stocks, which is going to be in dollar terms and percentages. And then over here, I have the, percentage that the stock has increased basically since the 1st of April. And this is going to be year to date. So similar, like, I've been saying, a lot of the growth stocks, so you got Zillow, Square, which I'm actually surprised Square has held up so much better than other growth stocks, but it's probably because of its correlation to Bitcoin now, just because of that revenue they get from the people purchasing Bitcoin and other cryptos on their app. But Uber, Spotify, MongoDB, Salesforce, Lyft, Splunk, let's see, JFrog, and then you got Adobe here. All these companies, these are the companies that are lagging right now, and you have a lot of the small cap and growthier names that look to be appealing right now. So these are generally the companies I'm looking at in my portfolio right now. I'm pretty happy with the position size of all these companies. The only other big tech name that I wanted to purchase a little bit more of is Facebook. And that was one of the reasons why I did that video a couple weeks ago, was because, man, Facebook is a really good company and their numbers are so strong. So I wanted to get that to around 5% of my portfolio. And then on this tab, let's see, I put down all the positions that I bought basically since the beginning of April. So, I bought Splunk at the end of March at $136 a share. And that stock has continued to trade down. Now it's at 117. Like I was saying, I'm probably going to buy another block of that before their earnings. I also bought Paychex at $98.76. That's because when I was purchasing, between Splunk and Facebook, I knew I wanted a company that paid a good dividend. And Paychex is, they're a very good company. They're similar to ADP, but they target a lot of smaller cap to mid cap companies. They have a really good balance sheet and they have a very good dividend with, good potential to keep growing it in the future. So I'm hoping I can do a video on that one too sometime. Facebook, I did a video on this. They really killed their last earnings report, so I'm really happy to own them. And if that stock trades down more, that's definitely a stock I kind of want to add more of. And then this is my new position in JFrog. I bought it at the end of April and just right before their earnings last week for $50 a share in April, and then it started trading down even more. It was at $40 right before its earnings. And then now after earnings, it's traded down even more. It's at 35.91. So there's a ton of fear in this stock. It's same with all the other really small cap tech names. So if that trades down more, I might buy some more of that with my cash left. Uber, I bought some Uber at $56 a share right before its earnings. And, it did have a little bit of a fallout after its earnings, but I'm not super concerned. I think I'm pretty happy with my position in Uber. So if it trades down more, I might buy more, but I'm kind of thinking I want to load up on other names. Not because I really like Uber's potential for the next year, but I'm thinking that there are just other names that I want to get up to higher percentages in my portfolio. So yeah, this is basically a really quick review of my portfolio, just kind of my thoughts on the market. Let me know if you have any questions or if there's anything else you want me to cover in the comments below. If you made it this far in the video, please give me a like and subscribe. And everybody have a great week investing. This is Market Matt. Thanks.